What does a 10-year certain and life annuity mean, Stan the Annuity Man, also called life with 10-year period certain? Hi there. I'm Stan the Annuity Man, America's annuity agent, licensed in all 50 states and Puerto Rico, and the founder of Contractual Guarantees Only. I'm wearing the t-shirt. You know, I heart contractual guarantees. You own an annuity for what it will do, not what it might do. Never buy an annuity for growth, hypothetical, and non-guaranteed returns. So we're going to talk about single premium immediate annuities, life with 10-year, and other structures after this. So life with a 10-year certain, or joint life with a 10-year certain, or life with a 20-year certain, or joint life with a 20-year certain. The certain part of that is the backstop. So let's say that you want income to start now, and it's on your life, but you want a backstop. Backstop means what's the minimum amount of payments that my beneficiaries would receive if I died early in the contract. So life means life. Life is as long as you are breathing or on a respirator. There's no ROI until you die. So let's take the first example. Single premium immediate annuity, life with a 10-year certain, it's going to pay you for life. But if you died year 2, there's 8 more years of payments. If you died year 5, there's 5 more years of payments. If you died year 11, there's no payments for anybody. Make sense? Let's do it again. Life with a 20-year period certain. It's going to pay you for life as long as you're breathing. Don't care how long it is. If it's 190, I don't care. It's going to pay you. If it's past that, they're going to pay you. And by the way, lifetime income is primarily based on life expectancy at the time you take the payments, not interest rates. Not interest rates, life expectancy based. So life with a 20-year certain means that if you passed away year 5, after taking out the policy, receiving 5 years of payments, you passed away year 5, your beneficiaries get 15 more years of payments. You passed away year 13, beneficiaries get 7 more years of payments. You passed away year 21, beneficiaries don't get any payments. Is that clear? Pretty simple. Just a couple things you need to understand. The shorter the backstop, the shorter the period certain, the higher the payment. Life with 5 typically is higher than life with 10. Life with 10 is typically higher than life with 15. Life with 15 is typically higher than life with 20. Life with 20 is typically higher than life with 30-year certain. The certain period can be as long as you want. The annuity company is just going to lower the payment to make up for that contractual guarantee on the backstop. Remember Little League, the backstop? We're putting in backstops here. But period certain is not the only way to do it. A lot of financial journalists and old school advisors that really don't know what they're talking about when it comes to annuities, they'll say, we'll always do life in 20. That's dumb. I mean, that's just stupid. If you said to me, Stan, I want to make sure that 100% of the money that I put in from the start is guaranteed to either go to me or my wife, my kids, somebody, but the annuity company doesn't keep any, and it pays for the rest of my life as long as I live. What's the most efficient, cost-effective way to do that? That's called life with cash refund. That's what that is. If you said to me, hey, Stan, I like the cash refund, but I don't want my kids to get the lump sum. I want them to get payments until the money's exhausted. That's life with installment refund, meaning you pass away, the payments continue uninterrupted and unchanged to the beneficiaries until the money's exhausted. There's 45 ways to do lifetime income with a period certain, or lifetime income with cash refund, or lifetime income with installment refund. It's customizable. So life in 20 is not end all be all. Life in 10 is not end all be all. Life only means that when the bus hits you day 2, money goes poof, but we typically don't do life only unless you tell us to. And you have a specific reason, fully understand it. I've got to make sure you fully understand it. It's the highest payment, typically, because you're shouldering some of the risk. With a life and cash refund, you're not shouldering any risk. You're transferring it all. Depending on your age, life in 20, you might be transferring it all. When I say that, what if if you do the life in 20 and your projected life expectancy is 14 years, you know, it's going farther out than what the life insurance companies projected you to live. It depends on how you want it to happen. We ask two questions. What do you want the money to contractually do? When do you want those contractual guarantees to start? Then after that, hopefully you email me, stan@theannuityman.com, or go to my site, schedule a call, and then we'll drill down on the customization on how you want it to work. Money's going to be at the annuity company. Money's going to hit your bank account like clockwork, as long as you're breathing. I also encourage you to go to my site and download Single Premium Immediate Annuity Owner's Manual, Deferred Income Annuity Owner's Manual. They're one and the same. One just your defer, a SPIA. It's called a deferred income annuity. Same thing, pension products, no moving parts, no annual fees, no market attachments, no nonsense. Very, 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 very low built-in commissions as opposed to the whiz-bang hypothetical nonsense products out there. These are good pension products in a world that we don't have pensions. You know, 9% of the private companies do, and if you teacher, military, whatever, you might have a pension, but most people don't. You have to put pensions in place to develop that, what I call the income floor. You already own the best annuity on the planet. That's inflation. That's inflation protected. That's Social Security. Social Security is the best annuity on the planet because the increase that they give you is political, not actuarial. By the way, I'm contractual. I'm not Democrat or Republican, I'm contractual. Annuities are simple. We shop all carriers, A+ rated for the highest guarantee, period. A+ rated, highest guarantee for lifetime income. We don't care about the logo or the brochure or any of that crap. A+ are rated, highest guarantee, okay? So go to my site, run the quotes, download the books, and do me one last favor. Spinning clock above my head is going to have a video appear that talks about how annuities really address inflation properly, contractually, pragmatically, not some hypothetical pitch that never comes true, not some illustration that's not guaranteed. This is the way to do it. This is the only way to do it. For whatever reason, I'm the only one talking about it. I don't know why. I mean, this is math. Annuities are math. They're contracts. And just remember, lifetime income is based on your life expectancy. The older you are, the higher the payment, just like Social Security. All right? Watch that video, and I will see you next time.